two sort of distinct areas here, biotech to pharma, reacting differently to the current environment. First of all, on the biotech names, do you think they're just being tarred by the high-growth tech stock brush at the moment?
Yeah, I think that's probably right. I think you have a sector that is very growthy. The dynamics are different, large cap versus small cap, especially given the election and upcoming earnings season. So I think we would expect the small and mid caps to be very volatile on a day-to-day basis, which is what it's been showing over the last week.
What about this whole notion of the safety trade being in healthcare? Which part of healthcare, and are you seeing any flows into it?
We've definitely seen flows over the past 3 months. I think if you look at the XLV from July through September, it was some of the most dramatic inflows into large cap healthcare as a sector that we've seen in quite some time. So I think the sectors that have benefited the most from that have been large cap pharma, large cap med tech, and as was earlier alluded to, managed care, UNH, would be one of the stocks in the XLV that has performed very well. I think time will tell what happens to the sector broadly. Earnings next week kick off with J&J, followed by the midterm elections as well. So there's a lot going on, a lot of confluence within the sector.
You've got some nice dividends in the big cap pharma stocks. Do you think that's going to be a factor that will make them perform well in a bearish environment, or poorly, given that rates on offer from the fixed interest market are comparable again?
Yes, I think that's one of the most interesting debates going on now in healthcare. We wrote last week on this topic in the context of the 10-year moving above the average dividend yield in the space. So I think you have a couple dynamics going on concurrently. One is fairly positive fundamentals in the group when you look at Pfizer, Merck, Bristol, Lilly, et cetera. But then on the other hand, for the first time in a decade, you have this 10-year above the average dividend yield. So if you are a new investor into the space, particularly looking at income generating stocks, does that produce any pause? And we think it probably will, but it's a little bit too early, as the interest rate talk, which no one has really discussed for years, is now coming back into the forefront.
So can you name some names for us, Jared? The overall sector is down 5% so far this month. How do valuations look? What looks cheap?
Well, I think, the large cap space in medtech, we think Zimmer, a very attractive stock from a valuation standpoint, trading at a multi-point discount to pretty much every other peer with improving fundamentals, albeit gradually. Cigna's another we've highlighted as a big discount to the peer group. The wrinkle with the stock, obviously, is it's within the ARB territory, currently involved in a deal potentially. So we want to make sure we're a little bit careful there, but that's another one we've thought has been, very attractively valued.